Welcome to the Sand to Pearls Stock Market Commentary for market week ending Friday, August 1st, 2014. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 1.21 to 0.71, falling into bearish territory. The total count of securities in bullish or bearish patterns fell 3% to 1,995. The count of bearish stocks increased 26%, while the count of stocks in bullish patterns decreased 26%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now one consecutive week in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 183 points for the third decline in 10 weeks. At a negative 312.73 points, it continues below all 9 tops above plus 100, has fallen below the July 2012 bottom, and continues above all 5 other bottoms below minus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 2 accumulation days and 3 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Russell 2000 ended in distribution mode. Momentum. At Friday, 7:18 close, the CCI 20 signaled a zero-line reject long entry signal, and at Friday, 7:25 close, the CCI 20 dropped below zero, signaling the trade exit for Monday, 7:28 open. The results of this trade simulation was a gain of 29.92 points on the Nasdaq, or 92 cents per share of QQQ. At Tuesday, 7:29 close, the CCI 20 daily provided another zero-line reject long entry signal, but at Thursday, 8:31 close, the CCI 20 dropped well below the entry pivot point. The result of this trade simulation was a loss of 105.5 points on the Nasdaq, or 232 per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 4 weeks ago, while the CCI 20 daily began a Woody's uptrend 9 weeks ago. The CCI 20 weekly has now fallen below plus 100 after having shifted to an uptrend 4 weeks ago. Industry rotation the last 2 weeks. 4 of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, CompTech, brokers, disk drives, and computer hardware continue in the top 5. S&P retail has left the bottom 5. Oil services has entered the bottom 5. Bearish, semis, and networkers continue in the bottom 5. Focus this week. Excerpts from Watching the Narratives posted at www.zerohedge.com. A quick email to follow up on this week's market debacle. The question, of course, is whether this was simply a blip, yet another one, day BTFD opportunity, or the start of something bigger and worse? The answer, I think, depends on how the media narrative surrounding the week takes shape over the next several days. That's what I'm watching closely, and I think you should too. From a game theory perspective, this sort of seemingly out-of-the-blue sharp move had very little to do with anything that happened this week, but is a natural byproduct of the common knowledge game in action. I'll be watching closely and posting occasional updates on Twitter at Epsilon Theory. But in general, you want to see more articles like Hilsenrath wrote today. Jobs data not strong enough to make Fed accelerate tightening, and fewer about failed loans and cracks in the monetary policy dam that the Fed and ECB have built. Argentine default has extremely little impact on the narrative of central bank omnipotence. European bank defaults and forced capital rises, on the other hand, well, that's the sort of thing that can make the Red King wake up, and that will not be a pretty sight. This week's Sand to Pirls Stock Market Commentary, submitted by Donald Pearl, www.s2pmarketsignal.com. Thank you for watching this week's video, hoping that you're having a fabulous weekend, that you have a great week coming up, and wishing you true success.